Alright, so we're going to be taking a trade in here on this order block. I just want to see it touch it again. It may not give it to me, so let's see. I'm going to see it run one more time below here. I'm watching that. And stop loss have to be 12. And this will be 65. Best case scenario. As soon as this line right here goes underneath there, like, come on, give it to me. Come on. A little bit more. Just a little bit more. There it is. Alright, so I'm long. And what I'm trading off of is not that. There you go. 15-minute time frame. See these equal highs? There. I believe we're going to clear those. And all this business here at these equal highs, they'll be cleared up. And we'll drop back into a 5-minute chart. Okay, and you can see the trade here. What I'm trading on is that order block, and then I waited for it to dip down into the sell side liquidity pool again. So I want to see it go higher. We have layered buy side liquidity there. Let me put it here first. There, and then here. So the speed at which they drop down in here is indicative of them sending it down into the, let me scrub this over a little bit. You can see it's 8:25 a.m. my local time, New York time. No, I don't reside in New York, but for sake of you all knowing what time I'm looking at things, it makes it easier if you just set a clock to New York's local time. Very, very easy. Alright, and this should turn around if it's any good. You shouldn't spend a whole lot of time here. We have buy side liquidity pool on cable resting in here. Beautiful fair value gap in here. Bullish order block. That really was nice. Buy side liquidity pool here. The smaller one resides in here as well. So let me annotate that. Not that. Here. There. Back to the euro dollar. So far, so good. We want to see all of this run down, even though it's been back and forth. IPTA should price aggressively above this high. Now I'll tell you why in a second. Let me just get this on the chart. I don't need that many candles to do it, but this drop down rebalanced all of this, and look at this big block of price action right in here. Okay, think about this as a market maker buy model. Do you see it? We have the consolidation, sell out, right back into the bottom of consolidation, distribution, redistribution, another level of distribution, smart money reversal, low risk buy, reaccumulation. We drop down into an area of reaccumulation. So this should leave aggressively and clean up all this down movement into a bullish order block, so reaccumulated, and then send it higher. So this, all this movement here in the best case scenario, should be erased with bullish movement, preferably with more speed than it took in time than it took to get down here on these multiple candles. So in other words, what I'm saying is you have one 5-minute candle here, a second 5-minute candle here, and a third 5-minute candle here. So a total of 15 minutes to go down to here. I want to see it come back up and blow above this high in less than 15 minutes. Because if this is truly accumulation and new longs being added to a run above to get to 109.45, which would be my first scaling, then it should be quick. It should be fast. And we'll see if that's the case. It's banging on Friday's high here. And we'll see if it wants to run the liquidity below here. Because we have this low, relative equal lows, sell side liquidity pool resting at 98.60. Cable closes its imbalance at 22.69. The low so far is 70, so we got one more pip down. So far, so good on our euro. Again, we want to see, it took 3 candles to go down. I want to see it take less candles going back up and above. Okay, so I would like to see this particular candle be the one that takes us above this high. That would indicate to me that institutional order flow is absolutely in control on the buy side, and IPTA will want to reprice above this high, this high, this high, and make an attempt to get above 109.42. So the 5 level above that would be 109.45, and then any expansion beyond that would take us up into, I think it's hourly chart. Let's see. Yeah, relative equal highs back here. So let me drop that on as well. Right there. And the close is 62 and 9 pipettes. So we're going to see a run above that rejection block, and this level is 109.66.5. So I want to be, and again, the high on that is 66 and 7 pipettes. So I'm getting out ahead of that. It might run up here and close this right here. I believe I mentioned that in review. Put this level on as well. And that way I can do this. Add your descriptions in here. This is a 60-minute bearish order block. So that way when I put my cursor on this line in a lower time frame chart, watch what happens. I actually put that on the wrong line, didn't I? If you copy that, put that here. When you see me on a lower time frame, when I put my mouse on it, like that, it'll show what that level is. And this is going to be the 60-minute equal high buy side liquidity. Okay. And this is just another 60-minute buy side liquidity. Alright, so now I can drop back down into that 5-minute chart, and everything is, well, I didn't get that second candle, but this one should pop through. Looking pretty good so far. Not bad for a demo baller. So if I scrunch this chart up and you see those levels now, the way you work with your lower time frame charts and not have to work back and forth with the higher time frames is if you properly annotate them. And apparently I didn't do it there. There it is. You can see there. Oh, that's right, because it's over here. It's on a smaller swing. Scrunch it up. So now if I put my line here, that's a 60-minute bearish order block. 60-minute equal high buy side liquidity pool. Okay. And then the smaller levels that you have on your smaller short-term charts should be apparent. So again, buying when price dipped down into the liquidity pool here and the bullish order block. The takeaway from this is usually you guys see me do fair value gaps coupled with bullish order blocks, which makes a bullish order block high probability. And now I'm also showing you there is no gap here because it's been filled in here, but it does have a swing low. So I used the bullish order block with a sell side liquidity pool resting here. Watching price as you see me doing the recording, just go back and listen to me as I'm doing it. When price went below this low, let me show what the low is here, 18 and 3 pipettes. Okay, so 18 and 3 pipettes. When price dipped below that, I went long. And when price was below it, add the spread to the price as it was trading at below it, and it gives me my 109.19 and 4 pipettes entry. Stop loss 109.112. Very, very tight. You did not see me manipulate any movement on that stop. It's been the same. So is that a tight stop? Yes. Can you do these types of trades multiple times a week? Yes. But we have not made first profit, so I got to dial that back in. Slow down, ICT. You haven't made any money yet. So this is the third candle. It needs to really get above here and erase all this down movement. Again, ideal world, it should have been 2 candles to get back above these 3. But so far it's showing a willingness to want to run. I'll look to take one off at 109.45, 109.55. I'll take one more off, and then the balance will come off at some other price point. We'll see what happens in the delivery of the rest of New York. It's 8:38 a.m. my local time. And again, be mindful, this is the original consolidation, so the bulk of the liquidity is resting right above here. So let me extend that out. Okay. So this is a minor one in here. We want to see it just get above that. And this will act as a breaker. If it needs to come back down and touch it, that's fine. It's acceptable. We would not need to go back down and close this in. We want to see this as a breakaway gap, and I'll explain that a little bit later. Now, now it can rebalance here. What I was saying moments ago about it not wanting or needing to come back down in here to rebalance this. In other words, this high here at 109.24. It can come down and touch that and then expand up. If it trades above this swing high here and came back down to this level, I would not need or require it to trade back down to rebalance there. Now, right now, this is another entry drill. So you could take this as a long entry at 25. Okay, so you'd be at 28 essentially. So if I missed this one down here, I could use this as an entry to go in long and still use the same objectives I just mentioned moments ago. Now you're probably asking yourself, okay, Michael, you said it took 15 minutes or 3 5-minute candles to come down into this, and you said you would like to see it have less time to get back above it, and it hasn't done that. Is that worrisome? No. It's just, as an ideal scenario, a signature would be see it erase that quickly and then move higher. But everything in this chart is still indicating that it wants to go higher, so. We submit to time. Put this up here again, track the time. $8:40 candle here, and the 8:42 time locally. And again, I'm showing the demo account here. Usually you see me cut this off, and I wanted to show you that number one, I'm executing on a demo, and it's the same demo account you guys see me do my analysis with. And this is looking good here for cable. We're actually in the fair value gap right now. All right, let's go back over. Now, if this is a breakaway gap, which I'd like it to see it be, it should rally from here and go higher. Now watch this thing run. That old institutional order flow entry drill ICT teaches. Now, if you were a scalper, you could take 10 pips out of this right now and be done. Move to the sidelines. If that's all you were trying to do, which in my mind is foolish, because you want to leave something on, leave a leader in the water. See if there's any further run on it. It looks like it wants to go higher, so we're going to stay with this model. Now think about the folks that are short from over here and then lowered their stop loss right above this high. Do they feel safe right now? So to get these buy stops right above this short-term high, we would expect to see price rapidly run above here and here. Otherwise, the longer it sits here, or if it creeps up slowly, that gives them the opportunity to remove their buy stop and collapse their short. So that's one of the signatures we look for in price action, because if there's a run back to an old high, when we're in real close proximity to it, you anticipate speed. So when you hear me say, okay, I want to see speed and magnitude, like I want to see it really make an attempt to move with a great deal of conviction, and speed is the signature that we're looking for. When I'm saying that, or when you saw me indicate that and annotate it on my charts in the Twitter clips where I'm trading intraday with those examples, when I'm annotating speed, or I want speed now, I'm indicating that there should be a run on liquidity, and they are typically done real quick, rapidly. Okay, so study this in here now. It shouldn't go lower. This should stay open as a fair value. This fair value gap is now, in my mind, a breakaway gap. Okay, because we've moved higher. It came down, gave us our entry here. So institutional order flow entry drill technique would have you long based on that running below this short-term low here on this candle. So now we're expecting it to run rapidly above this high and this high. Otherwise, again, the liquidity dries up and there is no willing buyers at a higher price at this level. They'll have to run to a higher, which is what I think they're going to do anyway, but I'm trying to outline my internal dialogue that I have in my head when I'm thinking at the time. When I'm usually typing out, I'm saying it to you all because it's mentorship, and it is what it is. I mean, you should be trusting me. If you don't trust me, you're in the wrong place. And usually, like I've done narration over old videos. You've seen me do that. And you can hear the audio is really, really crisp because I'm in my studio area of my office, and I'm recording with the microphone and the pop filter and all that business. You may hear a little bit of a distortion the way I'm talking right now is because I'm sitting literally in my kitchen, and I have the laptop sitting on my island. So there's going to be a different sound, and just know that I'm talking live over the chart right now, and that's the reason why it sounds a little bit echoey, a little bit. Everything is happening real time. And this candle here, I really want to see it flip bullish. 848 right now, locally. 849 now. We want to see this candle go aggressively and make a run. Preferably, I'd like to see one candle do this run here and here. That's what I'd like to see. It may not be this candle because we're getting ready to close this one in a couple seconds. It'll be 850. So I think the 850 candle will be the one that runs this high and this high, based on what I just mentioned in regards to speed and running the liquidity out. And it could make me a liar and do it on this one, and that's fine. I don't care as long as it gets up there. But I think it's going to be the 850 candle that does it, because we're really close to it now. Any shorts that have stops here or here, they're really nervous right now. So watch when the time over here changes to 850, watch the reaction in this candle that opens up now. We're at new candle here, right there. Now watch how fast it runs for those stops. That's what I'm looking for. Small little imbalance there. So it can hit that, which is the top of that candle, and then run. It doesn't need to, but we're looking for this particular candle to make an aggressive run above here and here. Now, all of this, even though it's being done on a 5-minute chart, everything that's being shown here is done on any time frame. It's 100% scalable. So there's no reason for you to look at this and say, oh, this is that intraday day trading stuff, ICT. I don't want to be a day trader. I don't have time. I can't do it. It's the same thing applied to the higher time frame chart. So if you were a long-term position trader and we were using these levels that we've arrived at on the what was it, the hourly and such, hourly charts, where we had the bear order block here and the buy side liquidity pool here. These hourly levels could be weekly and or monthly levels, and this could be an executable setup on a daily chart. Okay, so don't get upset or discouraged thinking that it's only intraday that this stuff works, because it's all time frames. It's 100% all time frames. There's no reason for you to feel like it only fits in intraday. Notice I don't have any of the intraday tools. I'm just giving you pure price action. These are low resistance liquidity runs, all month one level content, because I'm trying to build that emphasis that you need to use that foundation. Everything that I showed you in month one, if you stick to that, and everything I teach you beyond that, it layers up exactly how I intended for you to learn it. But if you look at month one and say, okay, now give me other stuff, and you don't work with that as their foundation, you're not going to really learn. So just be mindful of this candle's high. That's what I've annotated here. So this would be like a fair value gap that they come down and hit, and then we'll see it run. We're still inside the candle. I think it's going to make that higher high, so that's what I'm watching. I don't think we did this high, came all the way down here, run up here, and then just go lower. I don't think that's what's happening here. Let's take a quick peek over at the dollar. It's a bit of a mess, isn't it? Let's zoom out a little bit. So here's Friday's high. Okay, Friday's high. I said, it needed to stay above Friday's high if it was going to remain bullish. We went below it yesterday, and then we came back up, cleared up some imbalance breaker, and now we have sell side liquidity here, here, and here. So a fair value gap with a bullish order block. So just concentrate down here around 98.35, 98.40 for dollar. Now, obviously, I'm talking to you like we're sitting together, but it's just for your learning. Now, I don't like that. Admittedly, I don't like this. So, do I let it come all the way back down here and close in this fair value gap? It's not fun to do that, but I'm looking at this order block here. All this down movement. So I have to be willing to submit myself to that. Let's see what that is. And this is the reason why you don't jam your stops. Alright, so that would take us, man, that could take us down in there pretty deep. My stop would not be in jeopardy, but still, I wouldn't like that structure that would be in place. There. We'll manage it. We'll see what happens. Stop still remains at 12, which is below our equal lows here. I'm not looking at that as a problem. I don't look at that as, okay, we come up here and now we're going to run these equal lows. The liquidity here, here, and the higher 60-minute chart equal highs, I think, are a larger pool of liquidity, and it's much more likely that they'll tag this liquidity up here, because if they went long here and bought here and then came back down aggressively in New York to get this level again to reaccumulate, they really would like to get out up here. So that's about a 50 pip run. If they kick it above 65, 66, it's about 50 pips of a run. So half a penny move, that's good. So we'll see. Let's monitor it and manage it, see what we get. Now notice also, because I have not moved my stop loss, any deviations from my analysis or what I would reasonably expect to see happen. Remember, I was expecting this particular candle to be the candle to take out this high and this high. It didn't happen. I'm not panicking. I'm not concerned. I'm not worried. I'm not freaking out. I'm not opening my stop for more risk. I have not moved my stop. My stop is at a point where it's not a point of concern. I'm managing the market up here. I'm seeing what's going on. I'm managing my position at this level. The stop's here to do its job. I'm not worried about it. It's there. It's my insurance policy. But I need to keep my focus up here and see if the signatures are still there promoting bullish movement. Now that previous down close candle was probably a hope and pray for bears to see it hopefully make a rounding over and go lower. Although if we do trade lower, if we get into this fair value gap, I'm going to add 3 more, and my stop would be under this candle's low. So 10917. Otherwise, I leave what I have and I don't do anything. But let me get my orders in play. Should it happen? And this would be 3. And stop loss would be 17 is the low, so it's got to be 16. And 65 is that. So I leave this over here, and if it trades down into the fair value gap here, I will buy it at market. Everything I just mentioned in terms of stops will be there. As soon as if I get that as a entry, this stop will immediately change to this trade's stop, because I would not want to be in the trade if it takes out this candle's low. So I'll take a small loss on the 5 lot if that happens, and I would take a little bit larger loss on the 3 lot from the entry to fair value gap. Again, I don't want to see it trade down there, but if it does, you know, I still would trust the structure to go higher. Now, if this runs higher and takes out this high, I would no longer be interested in trading this as a fair value gap because it's so close to the other levels of buy-side liquidity. It would not be in my interest to be a buyer again down there. I want to see dollar give way. Let me put this on over here. So I want to see this drift lower and attack the sell side liquidity here. That would fuel my long on euro dollar. Time is 9:02. And let's see this thing whip higher. It's spent a lot of time, in my opinion, here at this level at 10930 level. So I think that they're going to send it aggressively, not just above this high here or this high here. I think they're going to really extend it up into the 10960, 10950 level. So we'll see. Just want to add that I'll be looking to take my first scaling. Okay, so first scale, one lot's going to come off there. Again, as soon as we take this high out, I'm no longer interested over here with a buy in this area. Okay, so now it should expand. I'm no longer interested in taking another entry lower. Watch how it tears into this, and then up here. This is no longer salient. Neither is this. Pretty interesting how we saw it back here, and now we're up here. So again, if you were a intraday scalper, you would take profits off above this high here as well and capture, what is that, 15 pips or close to it, 12 to 15 pips, or wait for this high here to be taken out or this high here to be taken out over here. Imbalance clears and closes in at 20 institutional, so 109, I'm sorry, fills the imbalance at 109.32. So this is reasonable to come in here and fill that in. Completely acceptable. Nothing wrong with that coming back down into here. Preferably, I'd like to see it not do it. I'd like to see it just continuously move higher. Again, my stop is not moving. I'm not worried about my stop loss. I'm not worried about getting stopped out. Okay, just a little bit of an overshot in here. I don't think it's necessary to go down to this body here. That's why I mentioned just this area here. Rebalance. Now this should come back off, wick, and resume going higher. Still have about 4 more minutes or so, 3 more minutes and a couple seconds remaining on this 5-minute candle. Now, if we take out the low of this down close candle, that is problematic. That would be a problem because that means that all we did was take the liquidity here and they would not be interested in up here. So part of the management of this trade is I would be willing to collapse the trade and take whatever marginal profit I had. Should we trade below that low here? And why is that important? Why would I feel that way? Because we have all of this down close candle, which is a bullish order block. We've already traded into it here. So this is now a propulsion candle. Ideally, you don't want to see the midpoint or mean threshold of the propulsion candle give way. You don't want to see that. So I'm going to annotate that. Again, this is all out of your notes. When you go through the core content, this is in there. Not making it up as I go. So we'll just make this, we'll put a blue color like that, it's slightly different. So price should not, it's permitted to trade down to there, but it should not go below that. Okay? Again, perfect scenario, perfect IPTA signature would be, it wicks on this candle, goes higher, and resumes. It's funny, all these people outside the mentorship on social media, they have no idea what we're doing. They think they have it all figured out over there. Clueless. Now, some of you would probably thinking this. If this was highlighted as a fair value gap, could this be an entry to go long or to add? I would not be comfortable adding here, because if this is our parent price swing working within this current market structure, we have this high here, this low here. Now, if we looked at where we're trading at here, we're really close. We're really in a really deep premium relative to this high and this low. That dealing range here, we're really, really high. And it's, in my opinion, while it still could offer, like I'm expecting a continuation, I would not enter new positions there, because if I entered here, it could still come back down into this and I'd suffer more drawdown than I'm willing. Or it can come all the way down into this area here and still be able to go higher, but I would not like that for the current market structure to occur. And it would still be, again, entering at a premium, going long. We don't do that, okay? Notice what I did here. I waited for price to come back down. Let me get a fib on it. You appreciate it more. The high to low, okay? Equilibrium. Notice where I entered, below equilibrium. Okay, so everything I've taught you is being executed here, and I'm telling you why I'm doing what I'm doing, and it's working. Funny how that is. But buying up here, okay, or buying up here, if it would have dropped down here before taking this high out, if this is okay. But in my opinion, it would be better if it leaves it open like it did. Okay, so now that liquidity is gone, so we want to see an expansion. We want to see speed and aggression to get up in here to take that out. And I guess I should have my order ready for that. Modify. Market execution. We're just going to take one off when it trades above, or let me say it this way. Should it trade above this old high back here, I want to get out up there with one. Then my stop goes to break even plus one. Now look inside this high to this high. We have small little swing highs in here, equal highs here. It should rapidly run to the liquidity over here, because this is the larger price swing. So there's going to be a lot more orders resting above that high than just any of these in here. We already pierced and breached this high. So when I say I want speed, or speed is welcome in here now, it's because we're so close to where liquidity would be. If it spends too much time in here, anyone that's short that has a buy stop resting above this old high back here, they're going to pull their order and collapse their short, and that liquidity would dry up. So IPTA, part of its design is it will run quickly, so that way traders don't have that ability to either see the chart, reason for a moment, and say they're wrong offside and then we collapse the trade. Speed is usually the signature you see between these two price points here and here. Okay, the time, 9:14. Don't be confused or lulled in because of the wick that's forming in here. That's all part of the design of the algorithm. It does that to lull in short selling. There's nothing over here, okay? There's nothing over here to justify a turnaround and go lower here. The liquidity still is pegged at 109.41 layered to 45, and then up to mid-figure, 109.50. Then we have those equal highs on a 60-minute chart and bearish order block. Up in here. So you have the equal highs here, and then the bearish order block. See how nice that is? And you set your lines up appropriately. Watch this high back here. You can touch that and resume. Classic support and resistance. It has to work sometimes or the books won't sell. But you don't see that in here in your books. I want to see a big candle here up. Run right on through 109.42s. Now look at the chart now. Okay? Really appreciate what I've outlined thus far. This alone, this degree of clarity, foresight, understanding what it's going to do, why it's going to do it, what it should look like, all of that happening over my shoulder when it's occurring in the chart. Now watch it pop through that old high. Right back here, okay? There's liquidity just beyond that in that blue line, so watch what we do. Now as a day trader, you'll be taking your profits just above that high. Partials, not your full lots, just taking partials off there. Okay, I'm going to see it start reaching for that mid-figure. Just a little bit deeper on that run, I want to see. going to do 2 lots. Taking scale off there. Take 2. Oh, no one's waiting for price to creep back above there again. Support and resistance folks are looking to sell short here, placing stops just above it. That's going to add more buy side liquidity above it. Rebalances to this high, 109.39. That's reasonable if it comes down to there. I'd rather see it not. I'd like to see it continue higher. This is too shallow in my opinion. So just watch this high here, right there, 109.39. Okay, so watch it in here. It should give back and make another deeper run against that old high here. Think about the size of the move that took place from this high all the way down to here. Liquidity would be a lot thicker, okay, or more plentiful, let's say it that way, than just a run above to that 109.41. So watch for it to make an attempt to get a deeper run here. This is lulling in shorts, and their buy stops are now placed just beyond the high. They're always told what, 5, 10, 15 pips above an old high. So let's do that. $10 pips above the new high here. We're going to take this line off because it's no longer salient. Okay, and that's what we're looking for, mid-figure, 109.50. Everybody else, retail, is selling short. This is resistance in their eyes. This is just a speed bump. Institutional overflow is going to send it higher. Submit to time. Now once it moves in an area where I want to get above this high, I can take out 2. My stop loss will go right below this low here at 27. So 109.27 even. That's where my stop will be moved to. Does it need to come back down to this old high here? That would really sell the narrative that it's selling short. Honestly, they could even take it down to the order block here. Again, this is all part of why the stop does not move. Because if I would have jammed my stop up under here, I would be panicking. Oh man, it's getting close to my stop. My stop's way down here. I'm not worried about it. I'm managing the trade. The risk is managed already because of my stop. It's there. It's going to do its job. I'm comfortable. If it goes down here, yes, I gave up a lot and I didn't take first profit, but that's part of it. I'm not panicked. I'm not worried about being wrong. I'm giving the market opportunity to move and not have my emotions be like a tug of war. I'm wrong. I'm right. I'm wrong. Because if you're in a trade and you're approaching your stop loss, you're not managing the position anymore. You're hoping and praying that your stop loss isn't going to get hit. That's not managing a trade. Okay, it's totally different. So part of efficient trade management is proper stop loss management. And that's why I teach not to jam that stop loss up there until you get first profit. You fund yourself, pay the trader. That way, if it does come against you and take your stop out, yes, you should be stopped out with open profit still anyway, but you've done what you're supposed to do in terms of execution. You exited during the move in your favor, not as a retracement, and you've also mitigated risk and reduced it by bringing your stop closer to your target and above your entry for when you're long, in this case. And you would reverse that, obviously, if you're selling short. But you have to know what's reasonable in terms of price delivery, so that way you're not spooking yourself and talking yourself right out of a trade. The context is not framed on this 5-minute chart. It's framed on the hourly chart. So I'm using the 5-minute to execute on a condition that is observed on a 60-minute chart. This is just a speed bump area where I can take a profit. It's not my ultimate objective. I'm looking for that 109.65 level. Okay, let's see how the shorts feel. In a couple more minutes. Time is 9:27. Okay. Remember, shorts just put their stops about 10 pips above that high that formed. And watch how fast they get purged. And because of that liquidity, it allows IPTA to spread and price will start spooling. In other words, it'll skip. It'll skip full pips. It'll go 109.41, 42.5, that type of effect, because of the liquidity that is obviously above that high now and was before we even saw it trade to this level. That's when spooling, S-P-O-O-L-I-N-G, spooling. The price delivery will be a lot more porous in here and it'll jam it up aggressively higher. So it won't be a consistent 109.40 and 3 pipettes, 40 and 5 pipettes. It'll be big 1 full pip skips. And you'll see them. Watch it and you'll see it. Now this is when a bull flag is real. Okay. I teach false bull flags and when they exist and how to trade with them. But this is one instance where the bull flag is legitimate. waiting for an expansion. Big candle up. That's what I'm looking for. Remember, retail trusted this as resistance. And that little blue box that's going to get filled in on the upside expansion. That will be them being escorted out of the marketplace. Now remember, I said I wanted to get my first scaling above 109.42. That's me doing this now. Okay, the trade is still open. It's just marking my exit on my first partial and my entry. Now look at the difference between these two price points, okay? See that? Less than 3 pips drawdown, marked to market right away. Now my stop loss has to go below this low here, so it's 27, 109.27. So that's what our stop loss is going to go to. I'm saying ours. My stop loss is going to go to 109.27. Okay, so now the position has been funded. I have a nice open position remaining and a reasonable stop on, and we'll see if we can get above that mid figure and run into this entire liquidity pool on retail 10 pips above. So I will take 2 more off here, and we'll just scrunch this back up. These are no longer salient, so I'll remove that and this. Remember folks, everybody on social media thinks they know what's going on here. They don't know anything. Alright, so now look what we have. Consolidation, distribution, distribution, smart money reversal, low risk buy, reaccumulation, reaccumulation, same area. Where's that? Over here where there was previous distribution. Waited for the order block, and then I waited for my entry to dip below this swing low into the liquidity pool that we were resting below that. Absorb those orders. Long. It's entering below the equilibrium between this high and this low. Boom. And where we're at now. Okay. So I'm looking for a little bit more further expansion. I like that mid-figure level. And I'm only going to leave one on should I get the opportunity to try to get to that 109.65, which I tweeted yesterday openly that level has my interest. So all you new cats that are in here, you're getting to see what no one gets to see over on Twitter. All the smart people that think they know what's going on, they have no idea. Let them stay in their ignorance. I heard it's blissful. Ignorance is bliss. I guess. 2 more lots will come off. If I can get a little bit more follow through on the upside. I'm personally waiting to see if I can print 109.50. If it prints that, I'll try to mark it there. And then I'll leave the remaining 1 lot on, and I'll move the stop loss just below this low here on that last single, if I can scale out at 109.50. Time is 9:40, and there's our candle, 9:40 candle. Again, stop loss is resting right below here. You can't really see that on MT4. That's the only reason why I'm showing you down here. I'm not trying to brag and show you the numbers over here. I'm sure some of you are appreciating that, but that's not what I'm trying to show you. I'm showing you proper trade management, the analysis. I'm using the tools and concepts that's taught to you. This is all month one low resistance liquidity runs, okay? And I'm doing this to promote the interest in using month one content as your foundation. Because if you don't do that, if you do not use month one as a foundation and build on everything that I teach you beyond that, you are wasting your time, you're wasting your money, and you're not going to learn everything that you think you were going to learn by joining. Okay? You have to execute and practice with month one content. If you don't do that, trust me, you're wasting your time and you will not learn. Simple as that. You have to apply yourself. I put a lot of thought into month one content because I knew if I gave you something that you could use right away, there's no excuse. People can come in and say, oh, well, you know, this is nothing. You know, this isn't what I was looking for. This isn't teaching me how to trade. You learn how to trade right away in month one. And this is all framework on that. But the things that I'm talking about and giving you in terms of insights, all those things are taught to you in later lessons in the core content. And charter member and some of the things I probably said today were something new. Okay, here's our expansion. We want to see that really pop up in and hit that 10950 level. Then I'll have one of those little, you know, celebrity moments where the cameras flash and one of those Hollywood beautiful entry and exit moments. Okay, we got 45, 46. Really should be expanding up in there, digging into that liquidity because retail really was trusting this as resistance, and resistance is futile. Just a little bit more, please. Just a little bit more sugar. Now, when it's this close to a mid-figure, it's easy to relax and let it happen. Sometimes it'll flirt around and make you wait for it. Just submit to it and wait. Now, if the sees 10950, all the liquidity resting at that level and just above it will be purged in just a few moments. Don't worry. Let it happen. I'm staring right at the level, the price level on the price axis over here. I'm watching for 10950 to print. I'm not looking at the candle. I'm looking at the price over here. Relax. Give it a second. It's all normal delivery. When I was learning how to trade in the 90s and I was just getting my consistency, I would always be bailing out like now, like thinking, okay, it made its run. And I learned that if I just gave myself 2 more minutes, okay, 2 more minutes, it would end up giving me that last little push. And it was always a little nuisance, like a thorn in my flesh. It would never let me go. And it's been one of those things over the years where I've allowed myself to just submit to more and more time, letting it unfold, letting it unfold. I mean, there would be nothing wrong if I collapsed it here. If I collapsed it here, it's good. There's nothing wrong with it. But knowing what I know about my history and journaling my trades and my executions and management, it's always been the case where if I bail, like right now, this is my typical where I teach you, get out before my ultimate target. I would be getting out right now. I'm trying to, in front of you, use the things I've learned from my own personal experience to simply submit to it and let it happen. Now, I risk losing all of this excellent exit points, by doing this. But I'm doing it also to illustrate a point. By journaling by understanding yourself, learning from the things that you have observed in your own execution and management of trades. It's better than any book out there. It's better than any ICT video because it's something that you know and understand because you personally can relate to it because it's you. You're the person that's the subject matter and how you think and what's going on in between your ears. So the struggle that you'll feel when you're in the market, when do I take profit? When do I take profit? That's actually the hardest thing to deal with versus when to get in, when to get in, when to get in. Because when to get in is easy. When to take your profit and collapse the trade entirely, which this wouldn't be a collapse, it's just a partial. The contrast between those two is, well, significant, but it's much stronger in terms of effect and influence over your decision making when it comes to taking profit, because that part of it's the greed. The entries is this fear of missing out. That's easy. I mean, if you miss a move, it sucks. You know, you wish you could be a part of the move, but you do feel the effects of greed more than missing a move. Like fear of missing out it pales in comparison to getting out when you should have got out and losing that best case exit. Now, I'm down to about a minute, so we'll see what happens here. It's 9:47. At 9:48, I will take the remaining two off, regardless of what it's done. I've used my time stop. Okay, two off there. One remains. Stop will go to, oh, it's the low here. 39, I'll move it to. Stop loss goes to 39. Handled. Okay. And that is where we're at in terms of the euro dollar moving up into the, I used this old high here, right here, the new high, intraday high. And if I use the 10 pips above this high here, watch what happens. 109.40 and 8 pipettes. Okay. There's those 10 pips in terms of a range over here. Now I'm doing this the hard way because all I got to do is go over to that candle, but I just want to illustrate it to you. So there's the high up to here. That would be 10 pips there. If we add 10 pips to this, I don't need this anymore. That's that. So here we have 109.40. So 109.50 would be the expected high. And the high came in here only off by 1 pip to 49. So this is the application of what I have tried to learn and utilize in my own journaling and seeing if it helps me. Sometimes it has helped me. Other times I've held on to it too long, waiting for that last 2 minutes to see if it would give it to me, and it would come back deeper on me, and I would regret that. But I did it openly in front of you just to show you. If it would have worked, it would have been great. I don't think it would have been all that much more of a selling point for me to do it continuously, because I usually still stick to, if I want to get out at 65, I want to get out at 45. That's really what I want to do. And I'll leave the other 20 pips and 15 pips to everyone else. But in this case, you know that I still have a position with a stop at 39 and a limit for that last single lot at 109.65. Okay? So hopefully you guys found this insightful. It's a real execution using the same demo account that I use when I'm talking to you. The dollar here, you can see everything that we've shown is on the same demo. And this should be a buy-side liquidity pool, draw on liquidity for cable. And here's that daily cable chart. Wanted to see it come down into the bullish order block. What's the low on this candle? 2209, and the low on this candle 2204. Institutional order flow entry drill on the daily, and it offered a run up just to the close was to 90 pips, so that's 80 pips plus, using that as an entry drill for the daily chart. So everything I just outlined on that 5-minute chart on Euro applied to this daily chart. I mean, right there is 80 pips using the daily chart. Okay. All right. And back to Euro. I think that's going to be it, folks. Again, hopefully this has been helpful to you. It doesn't have all of that typing on because I'm doing it in real time. I'm going to put this video as a separate video. So this will go on today as a first installment for today's upload. And then I'll just do the simple analysis portion as a second video. So it'll be a short video later on this afternoon around 3 o'clock, 4 o'clock. That way it's not a really long video, and throughout this afternoon, if you have time, you can take a look at this one here. Okay, so again, this was the lesson. I wanted to give you a real entry, management, stop, explain everything in my own voice as it's happening. And at the time now it's 9:53, and this session is now ended. So I'll talk with you all by way of the review and a little bit later time today. Good luck, good trading.